Welcome to the Stock Market Daily News Podcast. It's Monday, February 3rd, 2026. I'm here to get you up to speed on all the essential moves in the market from yesterday, so you're ready to trade on what's next. U.S. stocks finished broadly lower, with the S&P 500, Dow Jones, and Nasdaq all retreating as volatility and global shocks defined the session. The biggest signal for investors? Bitcoin's dramatic crash, coupled with sharp declines in gold and silver, had ripple effects across risk assets and equities. Let's unpack what drove the turmoil and where the market stands today. First up, the wild ride in cryptocurrency. Bitcoin crashed over the weekend, diving below $77,000 and erasing more than $800 billion in market value since its October peak. In the last 24 hours, about $2.5 billion worth of leveraged long positions were liquidated, hurting both retail and institutional investors. The sell-off was triggered by geopolitical tensions, concerns over U.S. central bank leadership, and thin weekend trading liquidity. Crypto stocks like Coinbase and Strategy were hammered in pre-market, each down roughly 4 to 6%. For investors, this signals risk aversion. Liquidity is king right now, and volatility premiums are spiking across assets. Next, let's look at precious metals. Gold plunged 9% on Friday to just under $4,900 per ounce, while silver saw a historic one-day fall of 26%. This unraveling of traditional safe havens was tied to the U.S. dollar surging higher, making dollar-priced assets less attractive globally. The simultaneous slide in both gold and Bitcoin challenged the idea that these are always reliable safe assets during turbulent times, something investors need to reassess. Turning to U.S. central bank news, President Donald Trump's nomination of Kevin Warsh as the next Fed chair sent mixed signals to markets. Warsh is viewed as less likely to pursue further balance sheet expansion, meaning less liquidity, and that prospect left risk assets like stocks and crypto on shaky footing. Interest rate expectations remain stable for now, but markets remain sensitive to any policy comments, so traders should stay watchful for Fed guidance this week. On the corporate side, Google's unveiling of Project Genie, a groundbreaking AI tool for instant 3D world generation, rocked related tech stocks. Shares of game engine maker Unity, user-created platform Roblox, and even CD Projekt dropped 10 to 20% as investors recalibrated expectations for the future of gaming and content creation. The fear? That new AI could quickly disrupt established business models and revenues. Finally, a quick global check-in, Spanish and broader Eurozone manufacturing data continued to weaken, with Spain's PMI at its lowest since April last year. Slowing demand, ongoing geopolitical anxiety, and elevated costs pressured stocks and aggravate the risk-off mood in Europe's equity markets. Let's recap. The Dow, S&P 500, and Nasdaq all closed lower as a wave of de-risking hit global markets. Volatility is up, with the VIX rising 10%. Key market themes. Risk assets are struggling, liquidity is being watched closely, AI disruption is real, and global uncertainty is pushing investors to play defense. Looking ahead, watch for corporate earnings from Amazon and Google, plus the latest U.S. jobs data and Fed commentary. Each could shift the market's tone quickly. That's your fast, focused wrap on yesterday's market. For more updates every trading day, subscribe and follow us. Your edge in a complex market starts here.